Welcome back. Well, the markets are holding in the green, but there are a couple of positive earnings reactions that we have got. And AMI Organics, that's one such stock that's now moved to the high point of the day. The numbers look quite good, both in terms of a top-line growth and margin improvement. To understand what's the way ahead, and is this kind of performance sustainable, we're joined by Mr. Naresh Patel, the Executive Chairman and Managing Director of the company. Hi, Mr. Patel. Good morning. Thanks so much for joining in. Well, in the last 1 month or so, you were indicating that things were on the mend, and the delivery of the numbers as well are fairly good. So congratulations on that front. But going by this run rate, what can you do for the coming year? You're doing close to around 190 crores in Q4. Should we be working with around a 750 crore number for FY24, given that you have done some inorganic growth as well? And margins have improved. For the year on the whole, what kind of a margin guidance can you give us?
Thank you. Thank you. First of all, good morning, everyone. And thanks for congratulating us for this number. In last 5-6 years, if you see, we are growing at a sustainable growth with the 20-25% annually. And this year, also, going forward, also, we will be grow between range of 22 to 25% growth rate. This is because of we have a very sustainable product profile and long-term visibility of our existing product as well as the upcoming product. So that help us to be growth continuously in upcoming years. Margin, as we directed in last 3-4 quarters, that every quarter we are improving our margin by 1.5%, and that is also you see in the numbers as well.
All right. So 750 crores, then approximately rough range, that should be the number we should work with, right? And margins will improve even comparison to Q4 or for the year you're talking about?
Yeah, it will be continuously this approach up to go to our FY21 margin.
Okay, all right. So 1 to 1.5% margin improvement and a 22 to 25% growth rate. Got that. Can you tell us a little bit about the export markets, Mr. Patel? How have you done in the quarter gone by? I mean, I think 60% comes from the export business, but what kind of growth rate are you looking at in exports? How are different markets performing for you?
See, basically, initially we were exporting around 80-85%, and we want to balance ourselves in export and domestic. And now we reach to the balancing between domestic and export. We want to remain like in that situation so that it will not be any impact on our revenue growth profile of any geopolitical situation change or any domestic areas change. So we'll be remain in 60-40 position.
Sure. No, I'm asking you about the growth rate, particularly in exports. You spoke about 20 to 25% overall growth rate, but particularly for exports, if you can just give us some more, qualitative analysis as well as what the growth could look like in FY24.
Similar fashion, export will be also increasing the same manner as our growth for the whole year. So it will be also increased by 20-25% in export as well.
Okay. All right. Mr. Patel, you spoke about FY21 margins. I'm just managed to remove that number. It was around 24%. So you're saying margins will start moving towards that level again from this 21-22%?
This is our, we have a very robust plan made for improving our margin. And because of the specialty chemical segment, which is very brand new in our portfolio, and we are improving its margin profile for specialty chemicals. So slowly, our core business of pharma is doing excellent. So it's we are targeting to make the combined margins should be go up to 22 to 25%, which is our target.
All right, 22 to 25% is the broad range for the margins front as well as for the revenue front. Revenues growth as well as 22 to 25% and margins as well in that vicinity. Since you mentioned specialty chemicals, I think bulk of that would be the inorganic growth, right? Gujarat Organics. It appears that you're doing close to around 95 to around 100 crores as of last year. I've just derived those numbers from your presentation. From here, what kind of a growth are you factoring in for this? Because specialty chemicals is something that the street would like to know about. That's the one that they're bullish on. From 100 crores, what does it do?
See, basically, Gujarat Organics, when we acquired, it was running at a low capacity, and we have to improve a lot of areas in Gujarat Organics. So the last year was a fully consolidation area. We had done a lot of technology improvement, and now it will be grow similar fashion as our core business as well. And we have a lot of new products in pipeline. So that product will bring our future growth on that.
So around 120 crores from this business, specialty chemicals business for this year.
You can say like that.
Okay. Can you tell us what is the capex amount that you have laid out for the next 1 to 2 years? And how would you be funding that capex? Will it be largely through the cash on your books, or are you planning to take on any debt?
See, basically, we announced one capex, which is 190 crore. That will be funded by our general corporate purpose as well as internal accruals. And if required, that we will go for the debt. Our electrolyte segment, which is going now, which is faster. If it will go faster, then may we require some further capex in FY24 for electrolyte as well. And going next 2 years, we are covered for the pharmaceutical segment, but for specialty chemical segments, there are 2 or 3 opportunities are in pipeline. So if that is come, then we will go for the capex. When we finalize this, we will announce the capex amount and timeline as well.
So you said you might need to take on some debt in order to go ahead with this capex. What is the debt on the books currently, and how much would you be comfortable taking the debt up to?
We are right now currently we are net debt zero company, so we have we can able to easily raise the funds based on our books.
All right. Final question, Mr. Patel. Then you're taking approval for a preference issue, I think so. You had acquired Baba Finechem, so I think some part of that would be towards this. But any other preference share issue are you looking at? Is there anything in the works, or that was it with regard to that inorganic growth?
No, that is only for Baba Finechem.
All right. So no more preference issue in store.
Okay.
No more preference issue, right?
No. Only for Baba Finechem, we are going for the preferential sales.
Okay.
All right, got it. Any more products in the pipeline? I mean, any more value-added products that you would be looking at?
We already introduced 40 products in a pharma segment and 20 products in the specialty segment in last year. And there are several products which are run. We also signed several LOI with multinational companies, and these are under right now approval. So once LOI mature into the contracts, then we will announce that. But these all are very high value, high volume and high value products.
Got it. All right, we'll leave it at that. Thanks a lot for joining in, and all the best. AMI Organics has had a pretty smooth run. In the last couple of months, I think it's a 15% growth that AMI Organics, the stock has seen, and good set of numbers as well. But